Hello everyone, this is Dion Blanks with the Economic Empowerment Circle, and I would like to welcome you back to another Wealth Wednesdays with Dion. So in today's Wealth Wednesday episode, we have a question from one of our senior viewers, and they received a letter this week from their retirement plan about an RMD. So we are going to dig right into that. This is not just for our seniors, but it's also for our viewers who are caretakers or who are just involved with your parents or your relatives' finances, and you want to make sure that they are covered. So please pay attention to this because it is very important. So first of all, what is an RMD? So an RMD means required minimum distribution. Now, many of you know that I was a retirement plan administrator and trust officer for regional banks for quite a while. And one of the main things that we had to do every year was make sure that our retirees received their required minimum distribution. Now, this is the amount that is required for a retiree to take out of their employee-sponsored retirement plan every single year after the age of 72. So if they turn 72 this year in 2022, they are going to receive a letter from their employer-sponsored retirement plan letting them know it's time for them to begin their distribution. Now, why is this important to you? Well, one of the main reasons it's important is because the IRS imposes a 50% tax penalty if this required minimum distribution is not taken. So if you have received this letter and not sure what it is, please make sure that you open it, you read it, and you go ahead and make your election as far as how you want to take this distribution. Now, how this is calculated is based on your ending balance as of 12/31/2021, for example. So your ending balance as of the prior year. And what happens is the IRS takes that balance and it divides it by a factor that is determined by your birthday or by your age. So if you're 72, you can go to irs.gov and look up the RMD factor for your age, and it will tell you exactly how to calculate your required minimum distribution. Now, if you left your funds in your retirement plan, then they will automatically do this for you most times and go ahead and send you a letter or a distribution form telling you that you need to go ahead and start taking this amount. Now, it gets tricky whenever you start managing your own retirement inside of a traditional IRA because that required minimum distribution is still due. The IRS still wants you to remove that money from those accounts. And the reason why is because they want their taxes. So if you'll recall, whenever you made those contributions into your retirement plan, if it was a regular retirement plan or a traditional IRA, you were able to delay paying taxes on them until you distributed them or until you requested a distribution or withdrew those funds. Well, the IRS is not going to allow you to keep those funds and not pay taxes on them forever. So at age 72, they make you or require you to start taking money out of those accounts. So please keep that in mind that if they don't get their money and you do not take your required minimum distribution, they will impose a 50% penalty. So this is extremely important that you go ahead and ensure that you are receiving the paperwork if you are 72 or if your parents are 72, and that you go ahead and fill that out. Now, how do you get around this RMD? That's a great question. There's really no way around a RMD because it is required. However, if you have not reached retirement age and you're still working and still contributing, you may want to consider opening a Roth IRA instead of a traditional IRA if you do not want a required minimum distribution. As long as you're living, you do not need to take a required minimum distribution from a Roth IRA. So it's something that you can think about if you are a little bit younger and you're still contributing and you want tax-free money, go ahead and pay those taxes now. So whenever you get ready to withdraw, you don't have to pay taxes then, and you don't have RMDs to worry about. So that is how you want to, or what you want to know about an RMD. Definitely make sure that if you have multiple IRAs spread across different brokerages, that you are calculating your required minimum distribution based on the balances of all of them. And you don't forget one because the IRS will not allow you to forget, okay? So they will definitely come after those penalties if you do not take your required minimum distribution. So that is all I have for today. Thank you so much for your question, and I will see you all on the next Wealth Wednesdays with Dion.